Hello, welcome to my channel. Today I am going to cover Zomato's DRHP. DRHP stands for Draft Red Herring Prospectus, as you can see. So this is a very exhaustive document which the company submits to SEBI before an IPO. It is one kind of a process where company details out all its risk, business related documents, or all company information and all possible related uh, updates regarding company and impacts, or and mainly the IPO related uh, information or TNCs are mentioned in the draft red herring prospectus. So each and every company does this process or does this compliance related point before you approach an IPO or during the IPO phase. Objective of this video is to take you through the DRHP, which is a quite lengthy document, but what the focus point is to go through the essential or important points and what we learn out of it. That is the objective of this complete video. So stick around. uh, we will quickly run through the Zomato's DRHP, and hopefully you will have a learning in terms of how to go through the scheme through the DRHP, and what are the important aspects or important points about Zomato. Everything will be covered. So this is the DRHP, and Zomato, as you know, is a company which offers food delivery services. So initially it was DC Foodie Bay Online Service Private Limited, and later on they changed the name, and that is mentioned also below. So this is how the DRHP looks like. The first page where they show you the book running lead managers or the merchant banks which are involved in this IPO process as such. And this is the table of contents. I mean, what all is covered is a brief summary, and if you click on it, you can go to that link. So, starting with general definitions, risk factors. So, your definitions are there, what all is included, uh, uh, things are there. So, first, let's focus on the risk factors. This is a very interesting uh, piece of the DRHP, where they have covered all possible risks which Zomato can face or will face. So, risk relating our business and industry. So, here what they are saying in the first, what they have stated in the first point, that historical returns uh, not necessarily will give you the future growth. For example, the revenue of Zomato is increasing. It is not necessary in future it will grow. So what they're saying, our historical performance may not be indicative of our future growth or financial results. And moving on to next, we have a history of net losses, and we anticipate increased expenses in future. So they have given the details why they feel so. Okay, and then they have mentioned a point about COVID pandemic also. Uh, that impact of COVID pandemic will happen on their cash flow conditions and their operations as well. So this is one more a good or a proper risk which is covered. Then if we fail to retain our existing partners or delivery partners, then obviously they will not grow. So they have stated our business may be adversely affected. So these are certain risks. There are quite a few risks. We will go through each by each or the important ones. So growth of a business will depend on strength of the brand, any failure to protect the brand. So brand for someone like Zomato, Uber, their brand name and brand value is important. If that is impacted, obviously the company gets impacted and the financials do get impacted. Also, they have mentioned unfavorable media coverage might harm our business. They have also stated about litigations. Also, political risks are being covered here. So this is a good example of a risk. What to say? Risk presentation, or what could be the uh, riskier things a company could face. This is a good document to scheme through, especially for Zomato. If you are interested in Zomato, if you are looking to invest in Zomato, what they see, what the management thinks, you can clearly see in this particular document. They have mentioned something about competition as well. Then moving through, going ahead, if you do not innovate, which is the current application or the technology, also IT related risks are also covered here. So then IT related points are such as the system failures, if you're not able to manage the infrastructure. Obviously, if tomorrow the Zomato app is down, then uh, how will you place orders, how the orders will be executed, for example. Breach of data is also covered somewhere in this risk. Yeah, the next point is breach of data or security breaches. Recently, Air India and other companies have been uh, 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 are victims of phishing attacks and other things. So this is also a big risk. And so what they have mentioned is, if we are unable to make acquisitions and invest in complementary business asset technologies or successfully integrate them into a business, then the cash flow would be adversely affected. So what they are saying is that if the acquisitions we make they are not able to successfully integrate. For example, they uh, partner with some agriculture company or some other third party vendors, and they are not able to integrate or include them in the business, then it will be difficult for the company. So these are certain risks which are stated here. Uh, I will not go through each of them, but you can certainly go if you are further interested in reading through the document. Now, next is the financial statements they have given. So, current assets, current liabilities, all details are given. Uh, and next, maybe we don't want to go more into financial. This is a overall DRHP review. So as you can see, revenue has sort of increased close to 3 times in 3 years, but similarly, expenses have also gone up in that range, and therefore the losses have also piled up year on year. In 2021, I think they are doing better. So if you see in 9 months time frame, they have actually done well. Instead of 23,000 856 million INR, this is a much better number in terms of 3 quarters performance. So these are the financials how they present. And the uh, next part is on the name change. As you can see here, they incorporated, and then on 16th resolution, 16th May, they changed the name to Zomato Media Private Limited. A fresh certificate was incorporated. You can see their registered office. They are based out of New Delhi, Gurgaon. Uh, so all details are there. Independent directors details are there. So all these points are covered. So next, yeah, I'm going through basis for offer price. So all these bullet points are or will be finalized later on in the next stage. What we can understand is they are issuing equity share of 1 rupee each, which means the face value will be 1 rupee, and the offer price is dash, which will be determined later. So what they are saying, they have mentioned qualitative and quantitative factors of the reasons for the issuance. So we believe some qualitative factors or strengths because of offer price as follows: strong network, widespread network, technology is good, strong customer brand. Quantitative factors, they have mentioned all EPS and all, but there is no what to say positive number because of the losses in terms of EPS. So yeah, only the good part is for the 9 months. If you can see, the EPS has gone up from a negative 5 rupee to 1 rupee, but still it's a 9 months performance. And there are other points related to in terms of how the formula is calculated. You can go through the same. Next point is they have next point is about their company, Zomato as company, and what is their business, what they do. So if you see, they are saying our platform offerings first is B2C, which is food delivery and dining out. In addition, they have B2B, which is business to business, Hyper Pure, which is a where they collaborate and uh, take the organic products or agriculture products and give it to restaurants, I believe. And then you have Zomato Pro, as we might all know that they have partnership with restaurant where they offer discounts and other uh, customer related offers. So their main is food delivery and customer delivery partners. They have, and further details are that on an average, if you see, 10.7 million customers order food every month on their platform in the fiscal 2020. 99.3% comes from their Zomato application app. So how the app is important and how it is very important for them to maintain the app. That's why they had mentioned the risk about application. If you see 99 or close to 100% uh, orders are placed through their app. Then they have illustrated their economies in terms of food delivery, how a flow chart in terms of uh, how the transactions happen or the process flow, and they have given for certain details about dining out and their hyper pure business. So what they are saying, we supplied over 6,000 restaurants across 6 cities in India. So 6,000 is quite a good number in terms of hyper pure being started out recently. And Zomato Pro, as we all know, so what they are saying, we had around 14 lakh pro members, over 25,000 pro restaurants overall. And then there is certain order growth and things like that. And one more interesting point is on the impact of COVID. So this is a flow, what to say, a bar chart, and somewhere here COVID happened. So this was their impact in terms of the growth and how it is slowly recovering. Further details about their customer delivery partner. So right now have 161 delivery partners, which is quite a big chunk. And also they have stated advertising and sales promotion expenses as percentage of total income. So what is happening there? Uh, Total income is increasing, due to which the advertisement percentage has fallen down. So in this particular diagram or chart, what they are presenting is that in terms of uh, the profitability, how 2021 has been successful, or uh, in terms of unit, how they fare. So what they are saying, let's say fiscal 2020 unit economics rupee. So dark blue ones are the revenue generating part, the light blue are the expenses for Zomato, and finally the contribution or the profit and loss. So what you can see here, commissions and customer delivery charge consume becomes or accumulates to 58-59 rupee, but they have expenses more. Okay, and so because of which the contribution is negative 30 rupee. So if you see, there is heavy discount which they have reduced now. And if you are a Zomato active customer, you will also feel that the discounts are going lower. So the discounts have lowered down in 2021 because of the COVID necessities and the foods which we have to order. And the next part is other variable cost also have been reduced, and delivery cost also. Maybe if the volume of orders increase, maybe they have to pay less to delivery partners. Like in 2020, if a delivery partner was delivering 10 orders a day, now maybe he's doing 15. So unit price wise, maybe they are uh, that delivery cost per delivery has reduced. So due to which now they have a contribution margin or a profit in the 9 months fiscal. So this is a very interesting thing, because going ahead we can see, or we might see, Zomato being profitable, and maybe the sentiments could be very high for this particular company and the upcoming stock. So these are certain interesting charts in terms of internet usage and etc. So what you can see, the potential of Indian market is very high. I mean, the future looks bright in terms of internet usage. And obviously, if a country uses more internet, then high likely that they will use Zomato. So right now, if you see, we have 43% uh, access to internet population, whereas in developed markets you see more, China and US. And if you see, food restaurant consumption is 10% only in India. So from Zomato's side, in the next 2, 3 or 4 years down the line, it can increase. Maybe even if it doubles in, let's say, 2, 3 years, they will have a huge revenue increase. And with the current operating model and the delivery cost being going down, which we saw earlier, it can have a very positive impact. If you liked it, do like and share this video and subscribe my channel. Thank you.